Hey, what's up, ICT beginners? Good to see you back here again. Today is actually Saturday. The markets are on break, but then it's one of my culture to actually do top-down analysis on the dollar to know what I should be expecting over the new week. And for those of you who are coming here for the first time, this is ICT beginners channel. What I try to do here is to actually give you an overview of basically what you need to learn in order to become a profitable trader using ICT concepts. So in essence, this channel is dedicated for ICT beginners, and I try to arrange all the ICT videos for you in such a way that will help you to become profitable if you watch them sequentially. So I have it right here under the playlist. We have the ICT core basics and the intermediate, then the advanced level. So you can actually watch them in sequence. So kindly watch them in sequence. So let's have a look at what the dollar will be doing over the new week that we're expecting. So this is called intermarket analysis, and I'm going to do it in such a way that you as a beginner will understand. It's called intermarket analysis. So what we basically do is to actually do analysis on the dollar, which is actually the dollar index, and then we will trade all the foreign currencies that are paired with the dollar. I hope you understand that. Anyway, I will make you understand it better once I start doing the analysis. So this is called weekly bias. In simple term, the weekly expectation, or what we're expecting the dollar to do over the coming week. And I will start from the weekly time frame. Why? Because I don't want to go too far into the monthly data. The weekly time frame can give me an idea of what I should be expecting. That is basically what I'm saying. So quickly, let's have a look at what is happening on DXY. So DXY is basically the United States dollar index. What an index is basically an asset that measures the strength, the economic performance. This is in a layman's language anyway. So that is DXY. You can find it on TradingView. Just search for DXY, and then you're going to have it on different broker platform. So this is the chart for the dollar. So if DXY is printing bullishness, it means the dollar is strong. And if DXY is going bearish, it means the dollar is weak. So in essence, if we have a currency pair like this, let's give it GBPUSD. So if I have GBPUSD, and on this particular currency pair, the dollar is by my left hand side. So that means if this particular chart, the GBPUSD chart, is printing upward, it simply means that the dollar is weak, which in essence will reflect on this particular DXY. I will see DXY going negative. All right, it's just a negative correlation and positive correlation. So this one is saying that the dollar is going to be weak. If GBPUSD chart is going up, I will discover that this one here, DXY, will be printing lower. Let me take you to GBPUSD. Currently, you're going to see it. GBPUSD. This is the chart. I just want to make you understand it in a simple term. Can you see GBPUSD chart is printing upward for the last 2 weeks? Just the last 2 weeks. This is the weekly candle. Just the two candles here, you will discover that it is printing bullish. And if I go to DXY, I will discover that it is printing bearish. So that is the simple correlation. It is printing bearish, which means the dollar is weak. I hope you understand that. All right, so let me start doing the analysis. So what I have here is that I have a very big data, all right, the past data, and that is what technical analysis is all about. Now, am I going to start looking at this entire data, or I will focus on what I have recently here? Now, it is left for you to do that. Basically, me, I don't look at so much data when I'm doing analysis. I look at what is happening within the few weeks or within the few months that price have printed. So that is very important. Looking at too much data will actually create disturbance to you, and it will create confusion, and that is the reason you see me looking at this area. So let me show you this. the most recent market structure. Now you have to go back to your knowledge of market structure. I have a shift in market structure here. That is a breakup structure anyway. There was a shift in market structure the last time price went up. Shifted structure, this is a change of character, market structure shift, whichever one you want to call it. And price came down into the main threshold of this particular bullish order block, right? That is the main threshold. Basically, the 50% of where the candle have printed, all right? Where the body of the candle is. So that is the main threshold. You can measure it with this guy, with your FIP level, just the 50%, and I got it correctly anyway. So once you do that, you will discover that price came down, hit this level, retraced, creating a what? A lower high, LH here. And price trying to go, but it had a failure swing. Around that failure swing, that was where we had a shift in market structure. So what does that mean to you? It simply means that price is bullish at this point. So the most recent price action on the dollar weekly time frame would say that it is bullish. Perfect. Now the next thing to do is to look at where are we right now. What did price do? We have a price swing from here. We have this low, the lowest level here. Please don't forget, always make your analysis look better. We have the low here and the highest level that price went to. So if you're measuring, it is from here to here, not anywhere else. I am just trying to streamline everything for you. You have it here. So we have something called the premium and discount area. With your FIP level, you can measure the premium and discount. So you put it from the swing low and the swing high. So above the 50% of this Fibonacci tool is called premium. Below it is called discount. The medium is called equilibrium. I hope you understand that anyway. Once you are able to achieve that, you will know where price is on the weekly perspective. So price went up here, retraced, but notice something that happened around this retracement. Everything that happened was within the premium area. Price was just respecting the premium area. Let me measure it again. Probably you may not see it. Perfect. Notice the bodies of these candles. None of them closed below. Forget about this one. Not this one. This was just a stop at a push upward. But look at last week. Price printed below equilibrium area and it closed with the body of the candle. What does that tell you? For the few days we will have, we would be expecting the dollar to print bearish. Let me show you another secret. Take this particular candle and do the weekly. There's something we call the weekly AMD, accumulation, manipulation, and distribution. The weekly AMD is called AMD, AMD, accumulation, manipulation, and distribution. So what that normally means is that price will start this way. It will start by creating accumulation, all right, creating manipulation, and then it will distribute and close over the week. Now notice what price did over last week. It closed below the equilibrium area. It's giving you a hint that price may most likely push lower to where? Notice what I told you, price is always after liquidity. We have a sell side liquidity below here. And what else do we have after this sell side liquidity? We have a fair value gap that is not completely mitigated. All right. Remember, I told you for you to establish that an area has been mitigated, there must be a break of structure officially for price to go up. This is actually my theory anyway. I want to make it clear. I don't want to make assumptions on trading. Now I have a shifting structure anyway, right there. Shifted structure, it came down. This is the official mitigation area. And I have sell side liquidity resting there. Below here, we have a bullish order block. Everything is going to be perfect once I finish this analysis for you. So what is that telling you? If price is drawn to the direction of liquidity, that's why we call it liquidity draw, right? Or draw on liquidity. So once you are able to see that, you will discover that we have this particular bullish order block. All right, is that true? A bullish order block. And then we have a potential, the mean threshold, anyway, mean threshold of that order block. At least that is where we're expecting price to reach. The first thing price did here was to respect the PD-ARRAY. I hope you know this is a bullish mitigation block. It respected it and price went up, but it's not enough for the algorithm. Now we are heading back down because of this single reason. This mitigation block is in premium and price is not happy anytime we have this. Some part of this mitigation block is in premium and price is not happy. So how about this bullish order block is completely in discount, and hence the reason why price will push lower. So if I'm starting next week, I have this idea that the weekly buyers has a high chances of pushing to the mean threshold of this bullish order block, and then there is liquidity draw at least. All right, so you're not trading blindly, you are trading with an understanding that I know where price is going to. This is mean threshold. Let me mark it, mean threshold, with an understanding that I know where price is going to. So if next week I'm trading, I am still expecting the dollar to print bearish candle. Yes, at least for Monday, Tuesday, and Wednesday. At least this is going to be a red candle. Let me mark it red so you will see what I'm saying. All right, I hope somebody is understanding this thing. I am expecting to have a sell candle for next week, print of the candle again. Why? Because I am already in discount and I have some very important areas that price is expected to go to. This draw on liquidity and then the mean threshold of this order block. This is understandable. So if I go down now to the daily time frame, I can do anything with understanding. So literally what I'm seeing now is that area that I call draw on liquidity, very close to price. And this is what I want to see price print into the area I showed you. This particular area is the mean threshold of that particular order block. Yes, this area is where the mean threshold of that bullish order block on the weekly. So if I am expecting price to go there, everything I will be doing next week should be in line with that. Now, when you go down to the lower time frame, you will discover that you have price having a breakout structure here, and I'm expecting price to push further. So if you are scalping, you can go down to the lower time frame and trade in the direction of the smart money. So what does that mean? If you're trading any of the strategies, whether London kills on, New York kills on, you would be safe when you are trading bearishness, or you are selling the dollar and you are buying foreign currencies. Look at what price did. Price printed this massive, it's called a liquidity void. Anyway, we have it half filled. Price actually filled it halfway, more than halfway. So I think it's okay for price to continue printing bearish. So from what I see this week, I'm just giving you the basic one. Price is expected to be bearish next week as the week will start. At least for your beginners level, this is enough for you to know where price will be heading next week as price or as market opens. So next week you should be selling the dollar, which is simply telling you to buy foreign currencies. Now if I go to GBPUSD, what I should be doing is to go bullish. Yes, it's as simple as that. Is to go bullish on all my foreign currency pairs. I will be buying them right away. So this is GBPUSD. If you go to the weekly time frame, it has almost similar price action. You have draw on liquidity here. This draw on liquidity, and massively price is going to target these areas. Absolutely, you can't ignore these areas for price. All right, so you can see from that kind of price action that price is actually expected to follow this pattern. And if you look at it closely, this has created, this is where we have the shifting market structure on the weekly to the upside, and price is moving up. You don't expect anything to happen apart from this draw on liquidity. All right, so please take note of this, the direction of the dollar for next week. Thank you very much, guys, for watching. I think this is enough for you as a beginner, and you can trade learning it with demo accounts, and then maybe you are trading live accounts, you can go ahead and trade better. Thank you guys for watching. See you next time in the video.